Welcome back, traders. This is my market outlook on index futures for the week of July 20th. Now first, before we get started, I just want to apologize for not being very active on my channel as of late. I've been taking some time with friends and family, but I'm going to be getting back into the groove soon with potentially the last ICT lecture of 2025. But while that's in the works, let's go ahead and see what we can expect from the market going into this week. So starting with S&P on the weekly chart, last week we dipped down into this smallish weekly fair value gap and then made new all-time highs. Now I did mention this fair value gap last week, but I thought we could potentially get a little bit more retracement back into this larger fair value gap. But since that didn't happen, it's telling me that S&P is stronger than I expected. And now that we're running away and making new highs, I don't really want to see price come back down into this inefficiency anymore. I want to see a rally up for 63.91, which is the negative 0.5 projected target if you use this swing low to this swing high. So 63.91 is going to be my target going into this week, which gives about a 55 points of potential upside. Now dropping down to the daily, you can see last week we did continue the consolidation. But Wednesday, we dipped into that weekly fair value gap and then rallied on Thursday for new all-time highs and creating a daily fair value gap. So my attention this week is going to be this daily fair value gap. I can see Monday dropping back down into it, maybe even Tuesday, but either way, I would like to see price stay only in the upper half of this fair value gap. Now it's hard to see, but there is a 1 tick difference between the bodies of Wednesday's candle and Thursday's candle. So that's why I have this fair value gap drawn this way. And I have this line here as 50%, where I would like to see price stay above. And I would like to look for a long setup targeting either the weekly projected target of 63.91 or using the daily low right here to this high, and we get a negative 1.5 projected target at 63.83. So either one is fine. I prefer to go for the low hanging fruit, but just remember this video is for entertainment purposes only, and this is not financial advice. Now moving on to Nasdaq on the weekly, I'm going to go ahead and zoom in. So last week I thought we could rebalance this larger inefficiency, but just like ES, there's a smaller gap here that was not tapped into on Nasdaq, but it did on ES. So I'm taking this as SMT divergence on the lows, meaning Nasdaq is the stronger of the two. And now making new all-time highs, I don't really want to see price come back down into this inefficiency. Okay, so not much to talk about on the weekly, so I'm dropping down to the daily. Here is that weekly gap that we didn't tap into, but I don't expect price to come back down here anymore, unless we take out this low. Then price may want to revisit this daily fair value gap in green, but right now I'm bullish and I don't really expect that to happen, so I'll just remove this for now. Now projecting from this low to this high, we get -1 standard deviation. We've already reached that, so we don't need to worry about it. The next target is going to be -1.5 at 23,459, so potentially 230 points of upside. So now zooming in, okay, this is where my attention will be going into this week. We have a daily fair value gap. Again, I'm drawing it down here because there's a tiny volume imbalance and I have 50% of this fair value gap here. Once again, I'm looking for price to only trade in the upper half of this fair value gap. Maybe we get a drop on Monday or Tuesday and then rally on Tuesday, Wednesday, or Thursday, looking for that projected target. All right, so pretty straightforward this time. No need to overcomplicate things this week as we are leaving the consolidation. If you appreciate this simplicity, please give this video a like, subscribe for more insights like this, and until I see you next time, safe trading.